Hi guys, today is March 4th, 2021, and futures are pointing to a flat open pretty much, a little bit lower after yesterday's shellacking, with Nasdaq going down 2.7%, which is a big hit to all the growth companies because of the rising or scare of the rising bond yields. So especially investors are looking at the 10-year treasury yields, and pretty much you get all the stories. So once the 10-year treasury is going up, stocks are, or Nasdaq actually stocks are going down, and all the value stocks, so-called value stocks, like travel, leisure, and all the stocks that were hated before, they're going up, and the growth stocks that were loved before, they're taking a hit. So today, this morning, weekly jobless claims were reported, were 745,000 versus 750,000 expected, so a little bit lower number, but it was, I believe it was skewed because of the Texas closing and Texas freeze last month. So pretty much a flat, a muted number, and actually people like that, and futures ticked up because if the unemployment is not running, unemployment claims are still high, that means that the economy is not running too hot, and bond yields will not rise. So that's the common thinking about among investors right now. So it's all about yields this morning, and especially 10-year treasury yields. So basically, everybody is looking to that rather than stocks at this point. So let's jump to SPY ETF for S&P 500, and SPY is sitting on a 50-day moving average, and I don't know where this is gonna go. But if it breaks below 50-day moving average, we may go lower. But QQQ is not looking too hot, and I suspected before that it's not looking too good, and it actually broke through the 50-day moving average, and looks like we'll trade lower. But a lot of bargains out there, and I would start shopping, get my shopping list ready, because a lot of stocks came down significantly, like stocks like Nvidia, Walmart, and Costco. All these stocks are in the penalty box, and it's a great time to pick them up. Okay, so let's start with let's jump to stocks. And before we do that, if you want to see my trades on pretty much everyday basis, you can check out a Patreon, a link to my Patreon club in the description of this video, and drop me a like, as it helps me with the YouTube algorithm. So let's start with Zoom Video. Okay, so Zoom Video is another high growth stocks, reported spectacular earnings. Actually, I really like the earnings, $1.24 per share, beating consensus estimates of 79 cents per share. Revenue also topped, gave a beat current quarter guidance, and actually it was a very good earnings, but nobody cares about that, because Zoom is the representation of the company that is a high growth company, but it was hit, even though it reported really good earnings, because of the rising bond yields. So the stock came down significantly, and I don't know if I want to pick it up because it's trading below 200-day moving average. I want to see some strengths before I want to pick up some shares. So I would wait for Zoom probably to come down a little bit more before I pick it up. Okay, NVAX. Novavax is a vaccine maker, and they reported not so good earnings, to $2.70 per share versus $1.49 expected. Revenue also came in below, but it's not about their earnings, it's about their vaccine and when it becomes available. And they said that their vaccine will probably clear distribution in the US in May. It depends on if their British data will be used for by FDA to approve their vaccine. But in general, it's not looking too good, actually, to me. I mean, on the chart, it's looking like it's going down even more than that. So I would wait for this stock to come down to like. There's a big gap actually in until the like 123. There's the next support or something like that. Actually, 123 is the 200-day moving average, a little bit higher than that, but I would wait for it to come down to like maybe 150 before I pick it up. So, but it's not a bad company to be in, and especially to be in before their vaccine distribution in May, or FDA approval in May. Okay, Target. Okay, so Target reported really good numbers, actually. Spectacular numbers. Quarter earnings of 267, 13 cents above estimates. Revenue also higher. Target saw digital sales more than double, but at the same time, they didn't provide any guidance, and because of the pandemic, and investors usually don't like that, and they said that their margins will be a little bit compressed for the next quarter. So Target took a hit, and I actually think it's it's a good time to pick up Target. Actually, it's not pretty inexpensive stock, and I think it's a good idea to pick it up. TGT, NIO. Oh boy, poor Neo. Okay, so before people loved Neo, now they hate it. So Neo fell hard in the last few days after reporting a larger than expected loss for its latest quarter. That shows that growth is slowing down, and that's not good news for Neo and Neo shares. And it looks like it's trading below its 50-day moving average, and technically it doesn't look too good. So I think it may come down even more than that. So I would be looking at Neo at $35, so frankly, and unfortunately, because I like Neo, but I think it may go even lower than that. Okay, Ktb. Kontoor Brands. It's one of my favorite companies, actually. It's the company behind the Lee jeans and Wrangler jeans apparel brands. Basically, earned $1.23 versus 97 cents expected. Revenue beat as well, driven by strong digital sales. Gave better than expected full year forecast. And Kontoor Brands is excellent company, actually. And athletic wear is the style right now. So people are buying this, and this is the ultimate recovery stock. So I would be buying Kontoor Brands, even though it's looking a little bit overbought on a chart, but I think it's a good idea to buy it right now. I mean, it's not a very expensive stock. Rocket Mortgage. Okay, so that's a battleground stock appeared to be after reporting great numbers actually a few days ago, and they've been on the Reddit user list for some time, a few days at least, and it was it was going higher, like 77% a few days ago, and then was crashed down yesterday by like 33%. But in general, it's not a bad idea to buy the Rocket Mortgage because compared, for example, GameStop, Rocket actually has solid earnings, solid, and it's a very solid company to me, and like it's trading around $27. I actually think it's very safe to buy this stock, and compared to GameStop or AMC, this is the company that you want to own actually, and I would be buying Rocket Mortgage at this point. Okta. So it was reported that Okta is dropping like 10.5%. Wow, hit hard pre-market after reporting that they're buying customer software management company Auth0 for 6.5 billion in stock, and the company also reported earnings of 6 cents versus 1 cent loss expected, and gave weaker than expected current quarter forecast, and so investor didn't like the report because of the forecast, and because they're buying this spending money on this company. I mean, it's usually the company that buys another company that the stock goes down. And in this environment, Acta, I mean, I would expect it to get hit, and it does. It is getting hit. So I would wait for this company to come down even more, actually closer to $200 before I buy it. Okay, DKNG. DraftKings. Okay, so this stock is going higher today after announcing that a deal with the UFC was reached to become its exclusive sportsbook and fantasy partner in US and Canada. That's a big deal for this company, DKNG, DraftKings, and because UFC has a huge following, and majority of these fans of UFC fans are men who are gambling addicts, just like myself actually. So that's a big deal for this stock and for this company, and I think the shares will go higher, and I would be buying DKNG on this news. Okay, AEO. American Eagles Outfitters, that's sportswear, pretty much apparel company, and shares are going higher um, after reporting beating estimates and actually giving a great forecast for the next quarter. Best, they're saying that they will have best quarter in 3 years, the next quarter. So this is the ultimate, again, ultimate opening stock, and I think the shares will go higher. AEO. And finally, Walmart had some news, and it was reported that Walmart's unit Flipkart, India's online retailer, actually exploring the idea of going public on U.S. exchanges via a special acquisition company, or SPAC. And Walmart owns a majority share in Flipkart, bought it in 2000, back in 2018, and actually Walmart is trading like oversold, big time oversold, and I would be actually buying shares of Walmart and Costco. Costco is about to report earnings today after hours, and look at that. I mean, Costco RSI is like close to 20. It's unbelievable, and I would be absolutely grabbing Costco before this report tonight, and I think the shares will recover on this. I mean, I don't know if it will. Frankly, I don't know if it recover, but it's a great setup for the recovery of the shares. Okay, so that's it, guys. Don't forget to subscribe to my channel, click the like button, and I'll see you Monday.